Well, I'm cautiously optimistic about the UK economy. You referred to Brexit, and with regard to Brexit, it's now almost 3 years since the referendum. And I think it's worth remembering that in every quarter since the referendum, the economy's continued to grow. It's been a close run for in a couple of quarters, but it has continued to grow. And I think that's important, given all this uncertainty, you could say at the very least the glass is half full. Now, I wouldn't want to downplay, the risks out there. Not all the risks are just due to Brexit. But overall, I think that unless we're talking about a real cliff edge Brexit outturn, there's every reason to think that the UK economy will grow, possibly not at a very fast pace, but will continue to grow, and there will continue to be opportunities out there for business. Obviously, Brexit is one, but Brexit aside, there's still a number of other risks for the UK economy. And in particular, I want to highlight three, right? I think, first of all, there's the international environment. Coming into last year, we were hopeful that the world economy, and particularly world trade growth, was going to pick up. And that would be a real opportunity to manufacture it. Now, by and large, that's not happened. And certainly coming into 2019, there were lots of concerns about the global economy perhaps slowing by more than would be desirable. Now, overall, I think the numbers still look all right with the global economy, but certainly trade tensions between the US and China are a warning signal, right? Overall, I don't think that we're talking about a serious downturn for the world economy, but world trade growth could be a bit more sluggish than is desirable, and that will have a knock-on effect to manufacturing. The other things I would highlight are domestic, and in particular, the labour market in the UK, which looks quite tight right now, and as a result, wages are moving up. Now, that's both a potential constraint on profit margins, but also it points to the possibility that the Bank of England will have to raise interest rates. So, even if we have a smooth Brexit environment, that could be a risk for the economy. And finally, another thing that runs off that is that, the UK economy continues to have productivity issues, and even the manufacturing sector continues to have productivity issues. Our productivity growth is just not strong enough. And I think Brexit uncertainty has meant that we've not been able to do that much about that. In particular, investment's been weaker than we'd hoped, and I think that's not helped in terms of improving productivity. So certainly, definitely risks out there. Certainly, movements in the exchange rate have had a big impact on the economy over the last few years. Around the Brexit referendum period, we saw a big fall in the exchange rate, and that's had a big impact on the economy over the last few years by boosting competitiveness and also by adding to inflation. Now, by and large, that impact has started to go away, and if providing an exchange rate does go sideways over the next few years, it's probably not going to have a huge impact, either positive or negative. But we could see quite a lot of exchange rate volatility, not least because of the Brexit uncertainty. Over the last 2 weeks, as people have got concerned about Brexit again, the exchange rate has fallen again, and certainly against the dollar, it's at its lowest level since the start of the year. So I think that is showing warning signs for the potential for sterling to be quite volatile over the next few years. Well, on the Brexit front, there's only certainly some businesses have been looking at various ways to prepare. One of the key things we've seen happen over the last few months is a rise in stocks. So there's been lots of stock building for people preparing, at least in the near term, to be okay, if there's some sort of dislocation as a result of Brexit. So that's one thing. Aside from that, I think it's quite hard for a lot of businesses to really sort of insure themselves against Brexit uncertainty. There's certain things I suppose you can look at in that, so you might look at for domestic suppliers rather than relying on imports. Certainly people who actually serve the domestic market might be less hurt than people who serve the international market. But the last thing I would want to do is discourage exporters. But I think it is tough to insure yourself fully against the Brexit outcome. I think that's just one of those fins right now. In terms of on the exchange rate side, obviously, there's a number of fins you can do, and one of the things you could do if you wanted to is talk to your bank about how you hedge your currency exposure. I don't want to make this an advert for Lloyds Bank or the banking sector in general, but certainly, if you are particularly worried about export exposure, that's one of the things you could do.